with Peter Elston this morning, who's an Asia strategist at Aberdeen Asset Management and joins us in Singapore, where Aberdeen manages about $90 billion globally and also in the Asia Pac. Okay, Peter, let me just get some quick reaction here to what we're talking about, these falling prices in Japan. Not surprising, but where exactly is the Japanese economy headed here?
Well, I mean, we've been bearish on Japan for nearly 20 years now, so we don't see any reason to change our view. There are so many structural problems in Japan, but you know, the key to all of this is to really look at the companies themselves, and that's where if you visit these companies, you do. It's very hard to get a sense that these companies are being run for the benefit of shareholders, and there's plenty of other companies in Asia where there are opportunities to make money.
Yeah, and where are the opportunities to make money right now, Peter? It's a very uncertain world, lots of volatility in the markets.
Well, certainly this year is looking a little bit uncertain. We had this extraordinary rally last year, where in fact it was led by the weaker companies. Obviously, they were saved by the low interest rate policies around the world. I think this year is going to see markets become a little bit more discerning, where investors are looking for balance sheet strength. They're looking for companies that have a very sort of strong competitive advantage. But markets could go either way this year. On the one hand, you've got markets still reasonably well valued, but on the other hand, you've got this fear of a double dip, and at the same time, there's perhaps these protectionist fears growing in the West. So I think the key this year is to hold companies that you feel very, very comfortable with, that you feel are going to be able to survive any sort of relapse that we see this year.
Yeah, and where are those companies right now, Peter? Because the last few times you're here, you're talking about an Indian company called Unilever, which basically plays on the Indian consumer story. Also, BHP have been some of your other calls as well. But where do you see value these days?
Well, still in those companies. Hindustan Unilever is a great, simple business. And whereas if it was in the West, a fast-moving consumer goods companies wouldn't be particularly interesting. In India, it's a very exciting story, because you've got this very strong secular growth in personal disposable income. So it's Hindustan Unilever is a lovely, simple business, great balance sheet, very good returns on capital, and it's one where you go home at night and you can sleep well, knowing that it's going to be a company that's going to just grow very consistently over the long term. Same with BHP. It's just a very simple business that has got this extraordinary secular story to it.
Yeah, well, let's talk about Indian stocks, Peter, since we brought up Hindustan Unilever, because India today is announcing its budget, and we're looking at economic growth in India topping maybe 8% this year. But is this a market still worth putting your money into?
Well, as I said earlier, who knows what's going to happen this year? It's certainly a year where you have to be prepared for markets to correct significantly. It's possible that they won't, but if the risks that are building at the moment relating to sovereign debt in certain countries starts to spread, if you start to get these protectionist moves becoming more significant, then you could see markets fall. In the case of India, in terms of valuation, the Indian market is still reasonably valued, but it's certainly not cheap. And can it get cheaper? Absolutely. But on a long-term perspective, it looks okay. And certainly in terms of the companies themselves, India's always been a market where the government is quite inefficient, but the companies themselves are very well managed.
Okay, Peter, well, thank you so much for your time today. That's Peter Elston of Aberdeen Asset Management joining us there from Singapore.